The Trump administration has imposed tariffs on countries exporting goods to the US. This is a look at the impact of this on the Bursa furniture sector. The US furniture market is massive, worth around $230 billion, with imports making up about one-third of the market. Vietnam and China dominate the US import market, with very high tariffs before the pause. On the other hand, Malaysia had a 24% tariff before the pause brought it down to 10%. Malaysia is among the top exporters, with 2023 exports totaling ringgit 9.9 billion. 80% of Malaysian furniture production is exported, making it highly dependent on global demand, especially from the US. There are more than 24 Bursa-listed companies in the furniture sector, contributing to about one-third of the nation's furniture output. Of these, 5 derive more than 50% of their revenue from the US, making them especially sensitive to tariffs and exchange rates. Let us first get an overview of the sector performance before diving into two key exporters. Over the past 15 years, the sector delivered a modest 3.6% compounded annual growth rate in revenue. There was also hardly any profit growth. You can see two high profits periods over the past 15 years. These were driven by two factors. The sector high profits period coincided with the uptrend in the US housing market and the ringgit to US dollar exchange rate. The sector return pattern followed the profit pattern. Over the past 15 years, the sector experienced declining returns. Gross profitability has also declined. However, the industry is financially healthy, but lacks margin buffers to absorb the tariffs. You can see that the industry was already in a challenging position before the tariff war, with modest returns and limited productivity gains. Now, it faces the tariffs. Let us now look at the impact on Po Huet and Lee Han. Combined, they make up a significant share of Bursa furniture revenue. I posit that their business fundamental will decline in the immediate to near future. The first reason is because their profit margins have not shown any uptrend over the past 15 years. At the same time, they are not high enough to fully absorb tariffs. A 10% tariff could cost these companies ringgit 44 to 61 million, almost matching their average profits over the past 3 years. Secondly, they have high customer concentration with the top 3 clients contributing about 40% to 64% of revenue. As such, they may have limited pricing power. Next, there were no improvement in efficiency as illustrated by the relatively flat contribution margin and increasing fixed cost margin. Also, the return on assets and asset turnover for these two companies have declined over the past 15 years. Despite solid balance sheets, the return on equity has not improved. These companies face challenging performances even without the tariffs. What can these companies do when faced with tariffs? I have listed the general approach with the one that can be implemented quickly, such as absorbing some of the tariffs at the top. The ones at the bottom of the list, such as investing in the US, will take a longer time to implement. It will not be easy as each of these options have their cost and profitability challenges. At the same time, there are other second-level impacts with the tariffs. For example, everyone is now looking at non-US markets, creating more competitive pressures for these markets. The main positive point is that both are financially sound with low debt and low leverage. They were also good cash generators. Given the various challenges, you should not be surprised to find that these stocks are trading at a steep discount. It is obvious that there will be near-term disruption, followed by a possible new normal. The uncertainty associated with the tariff makes it hard to project future earnings. So, looking at asset value may be an alternative valuation metrics. In summary, these two companies are financially sound, giving them time to address the tariff challenges and opportunities. The information presented is for educational purposes only. Do you want to learn more about how to identify such stocks with the Fundamental Mapper? Scan the QR code to access it on the Sifu app. Thank you.